Hey, good morning. This is Mayor Valensky with Driving Markets. Driving, I'm talking about markets. Remember, anything said in this piece is an opinion only. Okay, so let's kick off. So Friday, the markets in the US closed up. Overall, they closed up for the week. Strong week. Expectations that the Fed will not be increasing interest rates so dramatically. So the Dow was up 387 points at 33,390. Okay, the S&P was up 64 points at 4045, and the Nasdaq was up 226 points at 11,689. Bitcoin was down nearly 1,300 points, and more importantly, the US Treasury, US 10-year Treasury, was down to 3.96. Okay, so every day the market's reacting differently. Every day there's fear that the market, their interest is going to go up, and there's less fear, or maybe they're going to go down, or maybe they're not going to go up at all, or maybe they're going to go up less than expected. No one really knows. So let's just try and grab a little bit of logic and rationale as to what's happening within financial markets. Okay, so the biggest driver for the last 15 months has been interest rates and inflation. Okay, so I want to be very, very clear. Inflation is not going to go down to 2%. It may go down to a slightly lower level, but we are now in an era of high inflation. It's not going to go down to 2%. I stated this last week and I'll state it again today. Inflation is not going to go down to where the Fed or the other central banks have this range of 1 to 3% or 2% or 2 to 3%, whatever central bank measures used around the world. Generally, the central banks have got this obsession that inflation needs to go down to 2%. Well, they need to get with it. It's not going to go down to 2%. So last week, as a result of information, as a result of guessing, they believe that interest rates are not going to go up significantly, and the Fed's only going to raise interest rates by 25 basis points. Okay, that is the consensus of opinion. There is an opinion that they're going to raise it by 50 basis points, but it's unlikely. Okay, even though I sort of think that they could raise it by 50 basis points, the probability is, because they're scared, they're going to raise it by 25 basis points, and they're going to be continuously and constantly behind the curve when it comes to inflation. So those shares that benefited last week significantly from the outlook of lower interest rates was Meta. Okay, let's go into Meta. And Meta, I'm not a big fan of Meta. Meta has got this obsession going into the metaverse, and I particularly don't like Mark Zuckerberg, so I've got a slight slant when I talk about Meta. Okay, so Meta went up on Friday over 6%. They're reducing the cost of their virtual reality headsets. Now, Brad Gerstner, who is a massive hedge fund investor in Meta at Altimeter, wrote a letter last October with concerns about the costs at Meta, and they're out of control. Meta reported, or Facebook reported last month, that they lost $13.2 billion in 2022 on metaverse. Okay, and they're probably going to lose similar to or greater than that in 2023. The metaverse, as far as I'm concerned, is a complete and utter waste of time. It's called meta trash. Okay, it's just not going to happen, especially in an era of rising inflation and rising interest rates. Forget about what happens on a day-to-day basis. Overall, I'm looking at the macro picture now going forward. So I can see metaverse slipping up. I'll see Meta slipping up on the metaverse significantly. However, they've cut the cost of their VR headsets, and that sent the shares up on Friday, because the headsets are just not selling as fast as they should. And Brad Gerstner at Altimeter said that they need to cut costs significantly in order to make it successful. And what Mark Zuckerberg is doing now, he is going on a cost-cutting exercise by layoffs, by cutting staff, cutting supplies, etc. And that will have an effect in the market, because as he looks to cut costs and gets more competitive, then what will happen is he will end up affecting other suppliers. Okay, for example, He's looking to lay off staff. Now, there'll be more staff laid off at Facebook, and that will cut costs even further. The other thing I want to mention today also is Bitcoin. Bitcoin, I stayed away from this last week, but it fell $1,300, and I thought I'd better grab on and give you exactly a bit of background as to why it fell $1,300. So Silvergate Bank is one of the crypto providers in the sector. Okay, and they've come out that they are going to be late on filing their annual return and could be subject to an investigation in the States by the SEC. Now, Silvergate was partly invested in the defunct bankrupt FTX. Now, Silvergate Bank has now has an independent audit on its books. So if Silvergate comes out either going bust, bankrupt, or under investigation, that's another shockwave into the crypto sector. Remember, I've been saying for a while that the crypto sector is not finished with its scandal and its drama, and that's going to continue throughout 2023. There'll be other platforms, other banks, other providers, other exchanges that will come out with bad news in the crypto sector, and that will continuously depress the price of cryptocurrencies and Bitcoin. And that's one of the reasons why I was professing to be a seller of Bitcoin, that you should stay short, or Bitcoin is going to go down to $10,000 because you're going to have another 12-18 months of scandals. Coinbase is now refusing to do all business with Silvergate as well as Paxos, so they're not accepting any ins or outs from Silvergate Bank. All right, and that has had a big impact on the industry. So be aware that as this investigation proceeds, there will be other exchanges and other platforms that will come out, and that's not the end of the crypto scandal or the crypto drama, because there's a hell of a lot going on there with a lot of money going around that people really don't know what is going on within the industry. And as long as there's that uncertainty, that is going to cap the advance of the cryptocurrencies and obviously the leader within that sector, which is Bitcoin. Going on to foreign exchange, the dollar ended up weaker last week against the pound, the euro, and the yen on Friday, interestingly enough, even though I do believe and I do say that the dollar yen is going to go much higher, simply because interest rates in Japan are at zero and interest rates in the US are going to continue rising. But the forecast is, on the foreign exchange markets, as is on equity markets, that interest rates are not going to rise as fast or as much as expected, and that pushed the dollar down and pushed also the DXY index down. We could be in for some surprises, because the central bank, as stated earlier, the Fed in the US is behind the curve, and probably inflation is going to rise a lot faster, a lot higher, and the Fed is going to be caught out. So in 2023, as I stated over and over again, you're probably going to see inflation in the US by June, around about the 7.5% to 8% level, and that's going to catch the Fed by surprise. Okay, as it is rising within Europe, Germany and France reported higher than expected inflation last week. So you're going to have that pattern consistent in the US as well. What else do we have? We've got bond prices. We noted that they're down to 3.96 US 10-year Treasury. Short term, the 6-month and 12-year bonds are above 5%, and that's going to push. And the 10-year Treasury is dropped, but the 30-year mortgages in the US are rising. This week we've got a lot of numbers out regarding employment, a lot of economic indicators as to where the economy is going, something to keep an eye on. That'll be very, very important. This is Mayor Valensky with Driving Markets. You can catch me on Instagram and on TikTok. You can subscribe, share. Hope you enjoy the channel. Have a good day.